Hi, I'm Jose Armenta, and this is your Federal Employee Benefits, where we cover topics aimed at helping first federal employees like you make smart financial decisions. Today, we're covering one of the most common mistakes I see feds make when they're moving their TSP to an IRA. Now, if you're new here, hit that subscribe button so you don't miss any future videos. Okay, let's dive in. Okay, most of you have probably heard the terms transfer and rollovers, which refer to the method of moving your TSP funds to an IRA. Now, while both terms are often used synonymously, they are two different methods. Okay, and using one or the other can have very different outcomes. Okay, so we're going to review both methods fairly quickly, and then we'll review the consequences of using one versus the other. Okay, so first off, what is a rollover? Well, a rollover, also known as indirect rollover, also known as a 60-day rollover, is when the TSP sends you a check made out to you. So Bob, federal employee, made out to Bob. He deposits the check in his bank and then moves the money from his bank to the IRA, okay, the IRA custodian. Okay, so the money moves twice. The money moves from the TSP to the federal employee bank account, from the bank to the IRA custodian. Okay, that is a rollover. Now, a transfer is different. Okay, the transfer moves funds directly from the TSP to the IRA custodian. Now, it can be done via electronically, okay, going from the TSP to the IRA custodian, and you never interact with the process, right? It's a hands-off process, which is preferable, okay? It's less that you have to do. Or the TSP can send you a check made out to the IRA custodian. So it's not made out to you, it's made out to the custodian, okay? Now, both ways, as long as you're not depositing the money into your account, both ways are considered a transfer. Okay, so now what's the difference? Okay, what's the big difference between a rollover and a transfer? Okay, so with a rollover, okay, one of the major differences is that with a rollover, when the money's moving from the TSP to your account, right, the check's being made out to you, and then you're moving the money to the IRA, okay, the TSP is required to withhold 20% of the funds, okay? And we're going to jump to an example of how that looks, but you are only receiving 80%. So you're requesting a transfer. If you're requesting a transfer of 100% of your TSP funds, and you're going to move 100% of your TSP to an IRA, the TSP is only going to send you 80% of your TSP balance, okay? The other 20%, that's being sent to the IRS for estimated tax, okay? So you're only receiving 80%, and you're required to deposit 100% to the IRA. Yeah, yep. So you receive 80%, but you have to deposit 100%. So you have to come up with that 20% somehow, okay? And that can be a significant amount. So if you don't have the cash on hand to make up that 20% that the TSP sent to the IRS, well, then you can run afoul. Okay, and we're going to look at an example of what happens when you're not able to deposit 100% of your TSP funds. Okay, now the second major difference, okay, is that there's a 60-day timeline. Okay, you're on the clock. You have 60 days to deposit this check to your IRA custodian. Okay, and if you don't do that, well, then it will be considered a distribution and not you moving funds from one qualified account to another. Okay, it would be treated as a distribution, and if you're under age 59 and a half, then you could be hit with a penalty. Okay, so that's the second big difference, okay, is that there's a 60-day timeline when you're doing a rollover versus a transfer. And then the third big difference is that you're only allowed to do one of these rollovers per 12-month period, okay? In any 12-month period, you can only do one rollover, okay? So something to keep in mind. Okay, it's not calendar years, it's any 12-month period. Okay, now that we understand the difference between a rollover and a transfer, let's look at an example of what happens Okay, we're going to look at two scenarios of what could potentially happen when you select a rollover instead of a transfer. Okay, so we're going to look at our favorite Fed, Bob. Okay, so we're going to look at two scenarios of Bob. We're going to say that Bob is 49 and he decides to roll over his TSP account of $100,000. Okay, he's rolling over his $100,000 TSP to an IRA. Okay, now the TSP, remember, what a rollover, the TSP is going to withhold 20%. So the TSP withholds $20,000 and Bob receives a check for $80,000. Okay, now in scenario A, we're going to say that Bob, he made an error. He did not understand what a rollover was. He did not know that he would have to deposit the 20% that was withheld. Okay, so he doesn't have the $20,000 to make up and to deposit to his IRA. So he only deposits the amount that he received from the TSP, which was $80,000. And because he does not deposit the full $100,000, okay, $20,000 is going to be treated as taxable income. That $20,000 that was sent to the IRS for estimated taxes that he was not able to pull from other sources, okay, that $20,000 is going to be treated as taxable income. Okay, the $80,000 that Bob was able to move over to the IRA, okay, is going to be treated as non-taxable rollover, so he won't pay any taxes on it. He met the rules with the $80,000, but again, that $20,000 that he was not able to make up is going to be treated as a taxable distribution, so he's going to pay taxes on it. And because Bob is under age 59 and a half, he's also going to pay a 10% early withdrawal penalty, okay, of $2,000. Okay. Wow. So not only is Bob going to pay taxes that he was not expecting to pay on $20,000, okay, and that might push him into a higher tax bracket, so he's going to pay taxes he was not anticipating paying. He may pay taxes at a higher rate because he might get bumped up into a higher tax bracket, and he's paying $2,000 in penalties, early withdrawal penalties, because he decided to use a rollover versus a transfer. Okay, so huge implications. Now let's look at scenario B. Okay, so in this scenario, we're going to say that Bob does have cash on hand. Okay, he does have $20,000 in an account that he's able to pull from to make up that 20% that was withheld by the TSP. So he rolls over the entire $100,000 into his IRA. Okay, because he was able to move that entire $100,000 to an IRA, and he was able to do so within that 60-day period. Remember, there's a 60-day timeline that you have to meet. He was able to roll it over within 60 days. That $100,000 is going to be treated as a non-taxable rollover. Okay, he will not have any pay any taxes on it. There will be no penalties. Okay. So now, assuming that Bob has no additional tax liabilities, okay, he's going to receive that $20,000 that he that was withheld by the TSP. Okay, he's going to receive that as a refund when he files his taxes the following year. Okay, so essentially he gave the IRS a free loan. Okay, who doesn't love to give the IRS free loans, right? So he gave the IRS a free loan. When he files his taxes, assuming there are no other tax liabilities, he's going to receive that $20,000. They're going to return that to him. Okay, so that's the major difference between a rollover and a transfer. While the terms used to move money from one institution to another are often used synonymously, okay, there are major differences that can have significant implications. So when you are moving your TSP to an IRA, make sure you understand the method that you are using. I hope you found this video helpful. If you did, hit that like and subscribe button. That's the best way to support this channel and to let me know to continue making these videos. Until next time, I'm Jose Armenta. Take care.